Look, $15 with a monthly contribution of $45 into an ETF that generate 15% per year over 35 years, lead to 515 grand. Like this ETF tracks the S&P 500, while this ETF tracks commodities. While this is a leveraged ETF that goes 3 times as fast as this ETF. While this is a crypto ETF. That's why ETFs are good, because ETFs are in everybody's retirement portfolio. Since the 1800s, since the S&P 500 index was created, it went up over 245,000%. The index hold all these different companies, so that means if technology is doing bad, people are still going to be ordering on Amazon. If Amazon doing bad, people are still going to be using Google. Inverse ETFs, this is another cool one right here, because hey, if you think the market going to crash, you can invest in the inverse ETF. Look. What's good, YouTube? Hey, today this is going to be the most informative video you ever seen about ETFs and how to make $45 turn into $500K with just ETFs. First thing first, I'm not a financial advisor, but I do have disciplined diamond hands. First thing first, I want to say thank y'all for 100 subs, and 3 hours out of my day is I'm able to teach 10 people plus. I think that's a good, little ratio. So I'm gonna stay disciplined enough to put in 3 hours, to continue to teach y'all every day. And yeah, I appreciate y'all for tuning in. Let's get into it. We finna go over what is an ETF and why are they good? How will it make you $500,000? Invest in ETFs in your Roth IRA so it's tax-free. How to see what's inside of the ETFs. First thing first, we got this slideshow, man. We're gonna go through what is on this slideshow. What is an ETF? How ETFs operate. Why are ETFs good? Warning, participating ETFs lead to wealth. Stock market ETFs. And then once we see this list right here, I hold these 3 right here. This one, and I ain't got my other one up there. But yeah, and we're gonna go over those. First thing first, understanding the stock market's ETFs. An exchange traded fund is an investment fund that holds multiple underlying assets. It can be bought and sold on an exchange, much like an individual stock. ETFs can be structured to track anything from the price of a commodity to a large and diverse collection of stocks, and even specific investment strategies. My source is Investopedia. Look up Investopedia. Just type in any sentence you see on this article and type in Investopedia, it's gonna pop up. And but yeah, like it said, it can track anything from commodities to a collection of stocks. On the last slide, we're going to go over the different ETFs that track different things. Like this ETF tracks the S&P 500, while this ETF tracks commodities. While this is a leveraged ETF that goes 3 times as fast as this ETF. While this is a crypto ETF, you feel me? I'm gonna try to make this under 10 minutes. That's always hard to do though. Various ETFs are available to investors for income generation, speculation, or hedging risk in a portfolio. The first ETF in the United States was the SPDR S&P 500 ETF SPY, which tracks the S&P 500 index. That is the top 500 public companies in the US. What is the top 500 public companies in the US? You may ask. Well, I'll show you right here. These are the top 500 public companies in the US. We pretty much use all of these companies every day because, okay, we use Apple every day, Google, maybe Amazon, Meta. Y'all might drive Teslas every day. Y'all might use Chase every day. Y'all might shop at Walmart. Y'all might use your Visa, MasterCard. You might watch Netflix. You might use all these companies. McDonald's on here, John Deere on here, you feel me? Those are the top 500 public companies in the US, or that's in the S&P 500 index. I ain't reading all that. Pause it and you can read all that. But if I read it, it's gonna make the video longer than 10 minutes. How ETFs operate. ETFs work. In the US, ETFs must be registered with the Securities and Exchange Commission. Most ETFs are set up as open-ended funds and are subject to the Investment Company Act of 1940. except where subsequent rules have modified their regulatory requirements. Open-ended funds do not limit the number of investors involved in the product. We put our money into a fund, and that fund puts the money into, you know what I'm saying, what that ETF is for. Why are ETFs good? ETFs are good for everybody. On every level, everybody on ETFs. Like, okay, first off, the billionaires own ETFs. The billionaires own ETFs, the millionaires, the 100,000aires, the 50,000aires, and it's the safest thing for people to own if they start their retirement account from $0. So that's why ETFs are good, because ETFs are in everybody's retirement portfolio, and that's where everybody start out with, from pretty much $0 all the way up to $1 billion. You feel me? But this is why they are good. Definitionally, you feel me? Why are ETFs good? Steady passive income. They pays through dividends and stock price and appreciation. So you got two forms of income, and if one ain't coming, the other one coming. You feel me? And honestly, if you buy them undervalued, you'll be getting both of these. But honestly, you buy long term, you're gonna be getting both of these, because long term the stock market always appreciate. The stock market always appreciate. But let's look at this chart, man. From 1971, stock price went from $2.73 all the way up to 6,715. So let's do this, right? Profit level. Entry level. So since the 1800s, since the S&P 500 index was created, it went up over 245,000%. So yeah, and it's gonna keep going up because of capitalism. Durable business model with steady cash flow. Consistent, profitable companies. They're heavily diversified, and they don't go bankrupt. Because look, the companies in the ETFs or in the indexes, they really won't go bankrupt, because they are the biggest and most profitable and most successful and most durable businesses in the world, essentially. They're consistently profitable, heavily diversified, they can't go bankrupt. So look, there's another thing, right? So the index hold all these different companies, so that means if technology is doing bad, people are still going to be ordering on Amazon. If Amazon doing bad, people are still going to be using Google. If Google doing bad, people still going to be buying Teslas. So it's like a collection of 500 companies. They're averaged in together to all keep this index green. You feel me? So consistent. They're durable. They don't go bankrupt, because think about it. Will they go bankrupt? Some of these probably will go bankrupt, but will they go bankrupt while they're in the index? No, because they gonna get kicked out the index before they go bankrupt, and they gonna get kicked out the ETF before they go bankrupt. So that's another thing. Look, resilient through crashes. Why? They hold 100+ companies. You feel me? The committees meet regularly to review companies. The index provider also does regular rebalancing. Warning, participating in ETFs will lead to wealth. Why is that? Because look, $15 with a monthly contribution of $45 into an ETF that generate 15% per year over 35 years lead to $515,000. And it's gonna be some good ETFs on this list today. There's two of them below right here, VOO and SPX for diversification and passive income. Then invest in undervalued companies with profitable futures within those two ETFs. See, you will outpass that 15%. If you split both your funds into these ETFs, and then you watch the companies in these ETFs and watch for when they become undervalued on the RSI, and you buy them when they're undervalued, you'll surpass this number, because an undervalued company within these ETFs can appreciate 30%, 20% overnight. Your stock market ETFs, These are the type of ETFs that I have. That's what I'm gonna go over first. Online brokers may allow you to invest in a wide variety of ETFs, including the following. Hey, I use Robinhood Interactive Brokers. Yeah, they cool. Them too. Shout out to them. Shout out Robinhood stock too, man. It's going to the moon. And I got it at 68. Well, my average cost is 68. But I've just been adding up. I had got that on the dip. It's all about getting that dip. All right, look. Passive ETFs aim to replicate the performance of a broader index, either a diversified index such as the S&P 500 or a more targeted sector or trend. So this ETF will be VOOT that we cover. For each of these categories, it's going to be over like 15 ETFs. It's your job to figure out of them 15 times 10 ETFs, which ETFs you want to have in your portfolio. Just don't have over 5. No, don't have over 5. Let's see. The more you have, the easier criteria you will have to invest in them. And then the easier your investment criteria is, the more you're going to lose, because the less you will be analyzing how to make a great investment. Alright, but let's check out the VOOT ETF first, and let's see what is in the VOOT ETF. Holdings. Go to TradingView, click the same thing I'm doing. But look, check this out. It also tells us the weight. 8% weight in NVIDIA, 7% Microsoft. So if you bought this VOOT, this Vanguard ETF, this is what you would be holding. All these companies right here. And look, over the past 5 years, it appreciated 115%. So think about this. It's like, okay, would you rather be saving money, or would you rather just be saving it in VOOT? Because whatever you saved over the past 5 years, if you would have put it in a safe asset, yeah, you would have been set. But the S&P 500 index been growing since the 1800s with a track history and proof, you feel me? So this follows the S&P 500 index. So if you would like to aim for this goal, this would be a safe place for you. What we got next? Let's see. What I own next right here. Commodity ETFs. Invest in commodities like crude oil or gold. Commodity ETFs can diversify a portfolio. Holding shares in a commodity ETF is cheaper than physical possession of the commodity. Man, I just started holding gold because of let's see. Let's go back to this. How resilient it was through crashes. Gold has been increasing in value since its creation, and it's been used since its creation for multiple things, and the demand for gold will only increase, So, gold been a great investment. I ain't gonna lie, I wish I got in earlier, but yeah, this is a gold ETF. I like it. But yeah, leverage ETFs are cool too. They go 3 times as fast as SPY or the S&P 500 index. So it's like, if you want to be more risky and you just don't want your junk growing 10%, you can put it in like something like this. See, check this out. Over the past 5 years, this ETF grew 317%. So think about it, right? If you would have threw $1,000 in here, and it would have grew 317% plus your 1,000. That's how much it would have turned into, right? Over 5 years. So it's like, think about this, like whatever you save as a freshman, once you graduate, you can buy a house just by putting some cheese in SPXL. That's it, and just let it sit. Inverse ETFs. This is another cool one right here, because hey, if you think the market gonna crash, you can invest in the inverse ETF. Look, check this out. 2020 during the COVID crash, this inverse ETF went up almost 50%. But yeah, man, so these are the ETFs that I went over today. The passive ETF, then we went over the commodities ETF, we went over the XPL, leverage ETF. And these ETFs, all these ETFs are something you definitely should study, but for the sake of the short video, we're gonna cut it short. Invest in the Roth IRA, open a Roth IRA, and put the money in the Roth IRA. Why? Because it'll accumulate tax-free after you turn 59 and a half and you withdraw from it. So that means all the money you quadruple, triple, 20x, 1000x is all tax-free. How to see what is inside of the ETFs? All you gotta do is click on it, click on this, click on holdings. And then some of them might say components, but this is how you do it. But I appreciate y'all for tapping in. Y'all, hey, keep making wise decisions. Keep having disciplined diamond hands.